Hey, my name is Kenta, and welcome to another video from NextGen Hub. Today, I'm going to be talking about some of the questions that I had before I started what is commonly known as the HELOC strategy. Now, if you don't know what I'm talking about, you can Google HELOC strategy or mortgage accelerator, and you'll get a dizzying amount of information about it. In a nutshell, you inject a large sum of money directly into your mortgage principal using a HELOC. This accelerates where you are on the mortgage amortization schedule, which means that every regular payment after a HELOC injection results in more of your money going to pay down your principal instead of paying for interest. Sounds simple enough, right? Nope. If you actually Google HELOC strategy, the quality of information can range from good and useful to terrible and utterly wrong. And that's the reason why I had so many questions about this strategy. I didn't know what information to trust. Although I heard about the HELOC strategy a couple of years ago, they seem a bit shady. But the idea always stayed with me, and I didn't actually get around to really looking into it until Christmas break of 2019. I wanted to find out if this HELOC strategy was a scam or if it really worked. Now, I'm not a financial advisor, CPA, economist, or lawyer, so if you need real financial advice, go seek a professional. Instead, what I hope to address in this video is to answer some questions you may have and or prepare you to have a better discussion with a so-called professional. But before I begin, one more disclaimer. I started implementing this strategy about 2 months ago. That is pre-COVID-19 world. A lot has changed and I expect it to further change. I cannot assure you that HELOCs will be available or approved in the future. I cannot assure you that housing prices will continue to rise. Everything is pretty much messed up and can go sideways or for that matter downwards really quickly. So just bear that in mind. So given that, let's go into the questions. First question, is it too good to be true? A lot of HELOC programs claim that without changing your lifestyle, you can pay off your 30-year mortgage in as little as 5 to 7 years and save tens of thousands of dollars. So I think anyone's first thought when they look into one of these programs is that this sounds too good to be true. And it really does sound crazy, so surely it can't be true. And most of these programs, quite honestly, do sound like a terrible infomercial. However, if you can get past that, and if you actually sit down and do the math, it actually works out. Using a line of credit like a HELOC, you are able to pay off your mortgage very, very quickly. Maybe not 5 years, depending on your situation, but definitely way quicker than any other method out there. Then, the natural follow-up question is, why isn't everyone doing it? Or at least in another way, why aren't more people talking about it? Why aren't the big financial gurus like Susie Orman or Dave Ramsey talking about this more often? Or when they do, they're really against it. Obviously, I don't know what they're actually thinking, but a fair answer is that using a HELOC to pay off your mortgage faster is not right for the majority of people. And that's because most Americans do not meet the prerequisites for the strategy to work. So, what are the prerequisites for the HELOC strategy to work? First and foremost, you must have positive cash flow. That is to say, you need more money coming in than going out. Again, you must have positive cash flow. If you have negative cash flow, or if you're living paycheck to paycheck, then this strategy will not work. The surplus that you have every month helps pay down the HELOC principal so you can do the strategy over and over again. If you miss HELOC payments, then you're just racking up a lot of interest, and over time, you'll owe more than without this strategy. Second, it's somewhat obvious, but you do need to be able to qualify for a good HELOC. So that means no bankruptcy in the last 7 years or so. Your credit score has to be good as well. Otherwise, you may be approved for a HELOC, but your rates are going to be pretty bad. And then finally, I think the third prerequisite is discipline. You must be very, very disciplined in order for this HELOC strategy to work. You need to be on top of your finances every month and ensure that you have positive cash flow. While the HELOC does allow for fluctuations in expenses, you do need to make sure you are adjusting HELOC repayments accordingly. So if you meet these prerequisites, you should really consider looking into the HELOC strategy to see if you can get rid of your mortgage faster. Next question, is it better than paying bi-weekly? Before implementing the HELOC strategy, I was paying my regular mortgage bi-weekly. And I think the benefits are very clear. you do get an extra month's worth of mortgage payment every year. And because you're applying more towards the principal, you do reduce that time that you take to pay off your mortgage. Let's say about 5 years off of a standard 30-year mortgage. But again, if you do the math, it will show that the HELOC strategy is much more aggressive in decreasing future interest payments than doing the biweekly schedule. Next question. Is it better if I invest the extra cash instead? So this is probably the biggest question I had before really diving into this strategy. Every month, I would religiously invest my surplus cash into the stock market to grow my investments. So if I implemented this strategy, it would divert some or all of my positive cash flow away from my investments to pay down my mortgage. I expect this is where I'll get the most comments, but a long story short, here's the conclusion I came to. If you assume, and this is a big if, that the average annual return on the conservative side is about 7 to 8%, and nothing crazy happens, your net worth, if you invest, will be greater than paying down your mortgage using a HELOC method. But I started thinking, what is my true financial goal? What do I want from life? Do I want to retire early and not have the financial burden of a mortgage? Ultimately, it came down to this question. Is my goal to be mortgage free or have a greater net worth? So when you start balancing all that, you have to find out what's good for you. If you're purely after net worth, then do not use this strategy. But if it's a bit more nuanced for you, don't worry, it's a personal choice. If it feels right for you, do the math until you're comfortable with the trade-off. Next question. What's the worst thing that can happen? Now, I did not foresee this COVID-19 thing would explode to this scale before I started. But I did think about what would happen if my income dries up and I cannot pay back the HELOC. Now I'm in a situation where I have the mortgage and the HELOC to pay off. I seriously think this is the worst thing that can happen if you implement this strategy. In which case, you need to be very careful you don't over-leverage yourself and get into too much debt. To prevent that, once you get the HELOC, do not inject the whole thing into the principal. Only use small chunks of the money from the HELOC so that if something catastrophic were to happen, you can pay it off eventually. Let's cross our fingers that I don't have to do another video telling you about the horrors that COVID-19 brought on. Final question. Can I do it by myself? So initially, when I was doing the research, I felt like I had a good grasp of the concept. But it also showed me that there are a ton of variables to take into account. And I'm sure there are more unknown unknowns that I haven't considered either. Also, because we're not talking about a couple $100, but instead tens of thousands of dollars, you want to avoid dumb mistakes as much as possible. So that's when I started to think having some kind of mentor made sense. Now, if you've done any Googling on this topic, I'm sure you've been served many different programs that offer guidance at a very high fee. Sifting through all these options, none piqued my interest until I came across a message board that mentioned the Speed Equity Program by Harj Gill. As it turns out, Harj is the original guy who brought this concept mainstream. He started the speed equity system in Australia first, and subsequently in many different parts of the world, including America. So once I learned that, I picked up his book on Amazon and read it. It's a quick and easy read. If you're interested, you should check it out. I'll link it below in the description. After reading his book, I was pretty much sold and organized a call with Speed Equity. If you do book an appointment, you'll most likely talk to Harj himself. From the several conversations I've had with Harj, I've come to really trust his advice. Every time we have a chat, it's very pleasant. He's very supportive as well. And as far as how the program's going, I'm very confident that my initial investment to pay for the Speed Equity program has been repaid in mortgage interest savings already. So, I'm crossing my fingers again that this successful start continues and I am able to pay off my mortgage in record time. But if it doesn't, I'm no worse off. This covers all the questions I had before I started the HELOC strategy. If you're still on the fence about this, or if you have different questions, please let me know in the comments below, and I'll probably make another video to answer those questions for you. Alright, until then, peace, and stay safe.